Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
I have been on the road for, I think the song is 8 days and 7 nights, but I don't know. I've been on the road a lot this week and you can tell by my voice. So I will apologize ahead of time for anything that sounds not normal. And hopefully we make it through
this. That carton of Camel unfiltered that you've smoked is showing through today.
Definitely. Just kidding. I'm just kidding. All right.
As am I.
We're going to talk. My husband asked me yesterday, he's like, do you feel bad? And I said, no, I just sound horrible. It's okay. All right. We're going to talk restaurant performance index. We're going to talk jobs report and we're going to talk trade because what else do you and I like to talk about? But other countries buying the wonderful beef and pork that U.S. farmers and ranchers produce. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, this week on the cattle side, live fed cattle were basically unchanged on the week. Those feeder cattle auctions were anywhere from $1 to $3 higher on the week. December live cattle futures contract was down $1.20, and the January feeder cattle contract closed down 85 cents. Choice box beef price was higher this week, up $2.75. On the hog side, cash barrels and gilts were down $2.20. December lean hog futures were also down $3.10 on the week. Also, the pork cutout value lost about $2.10 this week. That was really driven in large part by what were weaker bellies this week.
It really was just kind of a soft market overall. It's been, when we look at the cash hog markets, the last couple of weeks, we've seen a couple of really big days of sharply higher prices, and then everything's kind of pulled back. And we haven't had to, nobody's had to work real hard to move numbers. Nobody worked hard at all this week to move numbers, and prices just have been kind of on the cash side of things, sliding fairly consistent.
Let's just hope this is not the start of a trend, right? So we can see some signs on the horizon of maybe some things that makes us worried. Let's hope we get some bounce back here next week.
Hopefully, and we'll talk a little bit about this jobs report a little bit, maybe some better news. I don't want to say good news. I don't want to overpromise and underdeliver in terms of the overall economy, but some better news on that side of things. But first, let's recap weekly slaughter numbers as we take a look at those.
Yeah, so USDA tells us for the week ending November 5th, a run of 667,000 head of cattle. That's 1,000 less than a week ago, but 15,000 head more than a year ago. On the hog side, a run of 2.577 million head this week. That's up 20,000 head from last week, but down 35,000 head from last year.
As we look at those numbers year over year, not a lot of change from a week ago.
Yeah, that's right. So year to date, cattle slaughter 1.6% higher, and pork slaughter, hog slaughter, I should say, down 2.9%.
All right, let's talk restaurant performance. As we take a look at it, a minor slight improvement over August.
Yeah, that's right. So we got a 0.1%. So the overall index came in at a 101.0, up slightly from the 100.9 that we registered in August. When you start looking at the individual pieces of this, so the current situation index came in at 101.5. That's up about 0.6%. Yet the expectation side was down 0.3%. And kind of moderated the overall index this month. So still a lot of concern about the general economy as we look ahead. And I think that's really been what kept that restaurant performance index from being up stronger for September.
Do we overall just look at, even at this point, with what's been going on with the economy and inflationary concerns, and we saw the Fed take a look at interest rates again, just any small gain is a win right now to keep us moving in the right direction?
Yeah, so yes. When you see, again, as a consumer side of this, higher interest rates is doing nothing but taking money out of pockets. You see a general economy that's slowing down. I think all of those things could be more negative than they are. So any kind of wins here, you have to take as a positive, because hopefully it keeps us with relatively strong demand coming for beef and pork.
Let's talk jobs. Slightly better than pre-report expectations in terms of numbers. And we're not really even headed into that seasonal uptick in jobs, are we yet?
No, not really. So for October, we added, Megan, 261,000 jobs. That was a little better than the pre-report 205,000 estimated. However, when you look at October, it was below the 315,000 that we did add in September. September did get a revision up of 52,000 head. So 52,000 people. Used to talking livestock, but in general, I think a reasonably positive jobs report that we got today.
When we look at, we talked about earnings up a little bit. We've obviously not rising though at the rate that prices are rising overall. How do we gauge that into what that means potentially for demand for ag goods and for food products and those types of things in the economy?
Yeah, so when you look at wage rates, up 4.7% over the last 12 months, and you put it very well. So that hasn't kept up with inflation that we've seen over the same period, but at least it helps in some ways to provide a few more dollars in consumers' pockets. So it's good to see some higher rates. This all gets very confounded, though. I mean, we have a situation where you have the Fed, who is very driven to reduce inflation, and we're going to use interest rates to continue to try to push inflation lower. That whole process is really, I want to stop demand from growing so strongly, is the idea of pushing interest rates higher. I want to make automobile loans, home loans, all those things more expensive. I think we just have to understand we're trying to throttle this demand growth, but not turn it negative. I think there's a fine line between those two things.
Sometimes I think about it, and maybe I'm all wrong, but it's to me almost seems counterintuitive to try and to slow demand if we're trying to keep the economy and money and services and goods moving, to kind of push us out of it.
Yeah, and I will say too, so how did we get in the inflation situation that we're in today? Demand has been strong. I don't want to downplay that, but frankly, a lot of supply chain issues have driven inputs higher and have I think added to the inflation side of the picture. And so using interest rates as the tool to try to slow inflation, it's not as precise a tool as you might like to use, I guess, is the way I would say.
I feel like that's a hold on another conversation for another day as we get into that. As we wrap up today, we're going to talk monthly trade data, and really interesting looking at beef and pork. I'll let you talk about the numbers first, and then we'll get into that discussion.
Yeah, so for September, beef exports out of the United States total 276 million pounds. Megan, that's the first time we've been below 300 million pounds since February of this year. September came in 5.7% below where we were a year ago. However, when you look at year to date, beef exports up 4.6%. China's been important to that mix. When you look at the growth, because they're up 12.6% year to date. On the hog side, 513 million pounds of pork exported out of the United States in September. That was basically unchanged relative to a year ago, up 0.4%. Yet when you look at year to date on the pork side, so quantity wise down 716 million pounds year to date. That's 13.8% 2.3% below year ago levels. So a little bit of weakness there. And again, a lot of that is China. When you look at what was going to China, down 57% relative to a year ago, or almost 600 million pounds.
How much are you watching the global economic picture overall in terms of demand for both U.S. beef and pork? If we're going to be honest about it, it can be as great as it wants, but if we're not, if the economy is slowing and U.S. goods are more expensive because the dollar's up, I mean, like, I would have to assume that that's something that's weighing on folks' mind as you're looking at long-term picture for demand for both.
Yeah, I would agree with you. So those are the clouds that are definitely sitting there on the horizon. I guess I go a little bit further and say, however, when you think about maybe more pork than beef, but there's really nobody else out there trying to grow pork supplies either. And so the competition from the rest of the world is maybe less than it's been in the past. The EU's not growing, which typically would take a lot of pork exports. So it leaves us as the United States in a position to gain, I think, export share, even though prices are much higher and the dollar has strengthened. And again, I think then the big issue is just, what kind of demand weakness comes if we talk about an overall downturn in economies around the world.
Higher prices next year get real concerning, I think, as we look at that long-term picture and thinking about, like, to think that there's smooth sailing and we're just looking at an upward trajectory in prices.
And I'll say, when you think of pork versus beef here for next year, you and I continue to talk about what could be record cattle prices. Well, that could be record beef prices as well. And what that does to trade will be important to be paying attention to. I again will come back and say, I think consumers in a lot of other countries are beginning to understand, we have perhaps better beef in the United States, better quality, better taste. And so how much are they willing to pay premiums for the kind of products that we have?
Yeah, it doesn't get any better.
Gets no better than what we produce here, right?
That's right. Scott, that's it for this week. As we look ahead to next week, what reports are we looking out for?
Yeah, so next week we're going to get USDA's monthly report. WASDE's out, and then we finish next week with some retail prices as well as consumer sentiment.
Always great to see you, Mr. Brown. We'll see you next Friday.
Sounds great, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there. And guess what? The Market Minute with John Perkins is back. So go to brownfieldagnews.com. Check out John's daily market update to see the close and the rundown of what's been happening. Have a great weekend. We'll talk to you next week. I'm Megan Grevner for Brownfield.